Hello, let's play a game today and also learn something. Okay, so what's the game? You have to guess whether it will be head or tail. Okay, so it is head. Well, what's the game here? Well, most of the time when we start a game, we toss a coin. Why? Because we all believe that coin will not always go against us or not always be in favor of us. Okay, so let's keep the coin aside and try to understand one thing. Let's say this game continues and we are going to toss the coin for the 100th time. Every time I win, I'll make 1 rupee. Every time I lose, I have to give 1 rupee. Okay, so let's say the coin is fair, my luck is fair. I'll make 50 rupees and I'll lose 50 rupees as well. How much I'll take home? 0 rupees. At least I will not lose and I still have the fun of playing the game. Okay, great. Now we have another situation, and the situation is when there is an old man coming in the room and he says, every time you play this game, you have to give me 10 paisa, whether you win or you lose. Well, what will happen? To play this game for the 100 times and giving this 10 paisa again and again will cost me 10 rupees. So when I make 50 rupees, lose 50 rupees and then give 10 rupees of costing, I go home with 10 rupee loss. Apply this in the world of trading. Consider you are a novice trader and you are just playing on your luck. Every time heads come, you buy a share. Every time tail comes, you sell that share. You still have 50% chance to have fun into market. Many people these days I'm interacting who want to come in the market for having fun, okay, or trying their luck. So you will be able to do both of the things and still not lose any money, only if you are not giving that extra costing anywhere else. What is this extra costing I'm talking about? Many of you already know that costing is called brokerage, commission, stamp duty, turnover charges, SEBI charges, blah blah blah, so many charges you see on your contract note. Well, is that equal to 10 paisa for every trade? In some cases it is even higher. For intraday trader it might be lower. But point here is that yes, you bleed a cost every time you trade. And when you trade for the multiple number of times, that costing keeps on getting accumulated. So what is here to learn? Well, the concept which I'm trying to explain you, that it exactly comes around 10 paisa minimum for every trade. Doesn't matter even if you are using a discount broker. Because many people says that in discount brokerage we don't pay that much of charges, it's a flat charge. But that flat charge is still amount something. However, the STT and other thing and the GST remains the same, and that amounts to a good sum out of your trade. But apart from all these things, something which I'm going to teach you today is called impact cost. Previous version of NSE website didn't used to display it. I probably have not seen it on the trade snippet. But new version of the NSE website, every time you open the trade book or the order book of any of these stocks, you will see there is something written as impact cost on every trade. So what we are going to learn here is, I have already explained this in my course, a complete course on Indian stock market, but still people keep on getting confused and ask me. So I'm recording this video for them again to explain this factor. Well, so impact cost is something which you automatically give when you behave like a trader. Every time, sometimes you can be lucky that you will buy the shares at your price and you'll be able to sell the shares again at your price, the price at which you wanted to sell. But as a trader, you will be always in hurry and you will always jump upon the prices. What is the meaning of jump upon the prices? So when you want to buy, you may want to buy at the seller price, and when you want to sell, you'll be selling at the buyer price. Obviously buyer and seller are having difference. So in common life also, when you negotiate, someone offers you one product at 30 rupees, you want to quote 20 rupees for that. And one price where you both will be comfortable is probably 25 rupees, which is called the ideal cost. So if you are an investor, you may probably wait for your price or negotiate at the ideal price. But every time when you are a trader, especially the intraday trader, you will jump up on the price. And let's say in this example, instead of negotiating and freezing the deal at 25 rupees, if you go and jump at 30 rupees to buy, 5 rupees is the extra impact cost you are giving. 5 rupees is too high for this transaction. But in trade, in stocks also, at least there is a difference of 5 to 10 paisa every time when you see a buyer and seller on the order book. There must be an ideal price for that also. You may try to time that as well, but still you may not be able to time when you are doing a manual trade. So what will happen? You will keep on giving some cost, and that cost is something will be called the impact cost, and exchange keep on tracking that whether what would be the impact cost on certain stocks. What I'm trying to tell you here is not the definition of the impact cost, but the implications of the impact cost. As an investor, you do not have to worry about impact cost. My course, everybody who has joined from a perspective of being an investor, don't worry about it. You will be trading once in a while, once in 6 months, once in a year, so impact cost will not impact you. But if you are a trader and you see a stock where the impact cost has been clearly defined as 0.03 and you are making 20 trades in a day, guess what? How much cost you will be giving just on the impact side? 0.03 into 20 comes around 60 paisa. Let's say every time you place a trade just to make 2% or 1.5% on your intraday trade, and you keep doing it for 6 times, 2 times, probably 3 times you make money, 3 times you lose money, or 4 times even you make money and 2 times you lose money, still a total of 0.6% of the total trade you will be giving if you, let's say, make 20 trades in a day. So out of 20 trades, let me do one calculation here for you. The impact cost, if you are a trader just working for 1% gain. So 10 times you trade it. Let's say you are not only a lucky person but also a good trader, and you made 6 times a profit of 1%, and 4 times you lost. So you are fairly a good trader, with 60% chances. Now 10 times when you traded, 6% you made, 4 times you lost, so you may say that I made 2%. But what if the impact cost is 20 paisa of this trade, because you are manually trading and you are trading into some stocks which are not highly liquid? So if 20 paisa is the impact cost and 10 paisa is all other charges, then this 30 paisa you are giving as a costing to the market. If I multiply it by 10, it comes down to 3%. So even when you are lucky, you will be still losing 1% of your targets. But I'm trying to tell you that you have to be very, very careful as a trader. You have to trade the least number of time and only trade when you are 100% confident about your risk management, about the model on which you are trading, and you have tested in past that it has worked for at least 70 to 80% of the time for you. Knowing impact cost for a trader is very, very important. I have explained this in detail inside the class. Through this video, all I wanted to tell you is impact cost is something a trader must consider before getting into trading world. You have heard about 90% of the trader lose 90% of their money on the first 90 days. It happens because of also this reason, that there are hidden costs involved in trading, and when people come as a trader for the very beginning, they trade aggressively. They place 10, 20, 30, 40, 50 trades in a day. However, a smart trader will wait for an opportunity and just place probably 1 or 2 trade where he is very, very confident. He will take a bad day also into consideration and put the stop loss for a day also. Well, my course, a complete course on Indian stock market, is both for investors and traders. For traders, we are explaining them option trading strategies and technical analysis, and giving more and more inputs and intricacies around what happens to a trader and why he loses that. Want to join that course? You can visit www.kundankishore.in and start learning. Thank you. The course fee is only 990 rupees and it is fully refundable. The only thing is you have to come back within 48 hours to tell that this course is not suitable for you. Thank you.